Kevin, which of these headlines are you giving more weight right now? What's driving your thesis?
Contessa, good afternoon. To the downside, Iran. I think it's the proximity to a deal that is on the horizon. When you look at what that means, there's two components. There's the return of above-board sales on an ongoing basis. So think of those as flowing barrels. But the second part of it is if the reports are correct and the deal looks like this in the end, 50 million barrels of stocks delivered to market on day 60 after signing. That would come right at the time when strategic stockpile drawdowns in the U.S. are basically coming to a close if the deal were signed, say, this week. So you'd have more continuity in supply. You've already got 4Q with supply looking to be ahead of demand, and that's even without the Iran deal added in, and you see pressure to the downside.
And then we have the geopolitical tensions, which I mentioned. You've got some issues coming in with Russia. You have issues coming in new issues in Iraq and the turmoil that's happening there. How do you weigh in outside of Iran some of the other geopolitical risks?
Well, it turns out that there's another side to the story, and the Russia side is actually right now, there's still plenty of Russian barrels flowing to markets. On December 5th, that's due to change with the European Union sanctions. One question is whether there will be a price cap in place to allow continued delivery to markets, ostensibly at a lower price than Vladimir Putin might want. But even if that cap is possibly coming, the prospect that it might not could create a bid. What about the buyers of Russian crude who 4 to 6 weeks back from December 5th have to start asking, where am I getting my barrels if this doesn't happen? Where am I getting the supply I need to refine? So there's definitely upside catalysts. And it's possible that an Iran deal doesn't happen, in which case you have a decay in the region, greater risk to supply and transport routes, as we've seen in past periods when Iran has been pushing back against the West.
Where does OPEC fit in all of this these days? I mean, they are saying they're going to think about cutting production.
Yeah, well, my colleague Jacques Rousseau pointed out just last week in a note here at Clearview that the OPEC basically got back round trip. But if you look at OPEC's historical cuts, they cut when OECD petroleum inventories are ahead of the 5-year rolling average. And right now, we're still a couple 100 million barrels behind. Now, give me a big recession, give me a return of Iranian crude, you have a catalyst for a cut for sure.
Interesting.
Here we are heading into what is typically the height of hurricane season. We've had a very calm Atlantic hurricane season so far. But I just read a note today where the atmospheric specialists are looking at what's happening in the Atlantic and thinking, OK, well, now we may start to see some action pick up. How does the potential for a hurricane in the Gulf Coast or in the Caribbean affect what you're looking for toward the end of the year?
Well, a couple of dynamics at once. One is supply to the world. If we end up with a hurricane shutting down delivery to the East Coast, it's possible that stockpiles are so lean right now, the Department of Energy, the president might look to limit or restrict refined products exports, tightening the world, creating a bid for products in Europe at a time when a lot of diesel is going into power generation and backup generation. That would be a staggering result, but with an election coming up, you couldn't rule it out. Second side of that, of course, is that when hurricanes shut down the refined product production, they also shut down the demand for crude. So some divergence between the WTI barrel in the demand going into refineries that aren't operating and the Brent barrel would happen at the same time.